do have one more chart for us today. I believe it's Air New Zealand.
We have actually, yeah. So I looked at sort of, sometimes it's just not just the technicals there that we're looking at. If we're looking at sort of a fundamental, if we're sort of a fundamental trader, we're looking at valuations, say perhaps there. So I thought Air New Zealand's a great example here, because at the moment, Air New Zealand's done a massive rights issue, a few more shares on issue now, and the share price has come off quite a bit. But so fundamentalists might be looking at this company and going, okay, well, the average market cap for prior to sort of COVID there, I think was 2.9 billion in 19, I think it's 3.3 in 18 and 3.5 in 2017. So might be around that 3.3 billion is sort of the average market cap where this company would trade at in a more normalised setting. So if we had the view that, okay, this company over the next maybe 1 or 2 years might get back to those normal market cap and go back to normal valuations, then that gives us a bit of a valuation upside. So that's roughly around about $1 in these terms, probably just slightly above or slightly below there. But that gives us a fundamental valuation to work off. Even if we're not using technicals, we should still have risk management there, Kyle. So in this case there, if we had a 3-for-1 risk reward and we're looking at the sort of stock around 58 cents, we should only be risking sort of around 14 cents, about, that's basically like a third of our upside. And then if we're using a 4-for-1 risk reward as our sort of trade parameters, we should only be risking 10.5 cents. And if we're a 5-to-1 trader like Paul Tudor Jones, then we're only risking sort of 8.4 cents. So it doesn't matter if you're a technical trader or a fundamental trader, we should always be applying some risk management techniques, regardless there. So, if you use charts or you use valuations, then we should always be using some sort of risk management there. So I think, Air New Zealand, I think really interesting here, just because those historical valuations are quite considerably a lot higher than they are now. Even with the extra shares on issue there, we're trading way below its historical sort of market cap here. So, if you think like, I noticed that sort of Flight Centre, when it got down to sort of $15, $16, was trading a fair discount to its historical valuation there, and we saw a bit of a rise there. If you think the sort of same thing here for Air New Zealand, but regardless of our view, we should always be using some sort of risk management techniques there. We should be looking at the market mechanics as well, in terms of our trade, to make sure that it meets certain parameters. And if we want to be in this game for the long haul, I think we have to sort of stick to our playbook, stick to our rules, stick to your minimum risk reward parameters, and that's how you'll have success in the long haul.